Considering everything going on in the economy, including high interest rates and inflation, it's always worth celebrating when a stock raises its dividend. According to a recent article, companies have been slowing down the rate at which they're growing their dividends. Although companies in general are still increasing their dividends, the rate at which they're doing so has slowed down in the second quarter of this year. So in today's video, we're going to take a look at some high-yielding stocks that have kept growing their dividends this year at a really impressive rate. And on top of that, all of these holdings currently yield at least 9%. So with that being said, let's get into it. The first stock we're going to take a look at is Barings BDC, ticker symbol BBDC. This is a business development company that invests primarily in senior secured loans, first lien debt, unitranche, second lien debt, and equity co-investments. They specifically like to invest in companies with an EBITDA of $10 million to $75 million and in the manufacturing, distribution, business services, and transportation sectors. They've been publicly listed since 2007, and they're actually one of a handful of BDCs that were publicly traded before the financial crisis. Their stock currently offers investors a dividend yield of 11.59%, and they issue dividends quarterly. This company has increased their dividend 3 times in the last year, with their most recent increase being announced about 2 months ago. Right now they currently pay 26 cents per share. I've talked about the history of this company in the past because given what's happened with its share price, I think it's worth mentioning. This company wasn't originally owned by Barings, but by another company called Triangle Capital Corporation. In 2018, after years of mediocre performance, the company Barings took it over. So all this past history before the year 2018 wasn't the fault of the current management team, so I don't pay any attention to anything that happened to this stock before the year 2018. Going through some of their recent financials, this company has been sustaining its NAV better than most other BDCs in our high interest rate environment. As of the second quarter of 2023, they had a payout ratio of about 80%, so it's been pretty well covered up to this point. They've also been repurchasing shares of their own stock, which usually helps the performance and is usually a good sign of strength that a company is doing well. Some companies will do this when their stock is massively undervalued, and again, it's a really good sign of strength that the company is doing well. They also have this really handy chart that shows the history of their dividend increases since Barings took it over. They've got a pretty well diversified portfolio of investments, with 67.6% being first lien debt and roughly 14% in equity holdings. So they lean a little more on the equity side here, which can potentially lead to greater share price growth if they do a good job picking investments. The majority of their holdings are in the financial and real estate sectors, followed by business services and high-tech industries. So overall, BBDC is a pretty good pick for a business development company. Their share price is up about 9% for the year, which is better than average for these kinds of companies. The next stock we're going to take a look at is Altria, ticker symbol MO. Altria manufactures and sells smokable and oral tobacco products in the United States. The company provides cigarettes primarily under the Marlboro brand, cigars and pipe tobacco principally under the Black & Mild brand, and moist smokeless tobacco products under the Copenhagen and Husky brands. They operate globally, making them one of the largest manufacturers of tobacco in the world, and they were founded all the way back in the year 1822. Their stock currently offers a yield of 9.19% according to Google. On August 24th, the company announced that they would be increasing their dividend by 4.3% to now 98 cents per share. This company has a very long history of growing their dividends, as they've increased it 58 times in the last 54 years, which is really impressive. While this stock has been really impressive in terms of being a great dividend grower, the market in general has been less optimistic about this company for a while. Over the last 5 years, their stock share price has fallen by over 31%, which is due to several reasons. Altria has continued to slowly raise prices on their products as the demand slowly continues to fall for their products. Up until this point, this strategy has helped them a lot in bringing in more than enough income to provide that dividend. But obviously, you can only raise prices so much before consumers start switching to other brands, use a smokeless alternative, or quit smoking altogether. Altria has been combating lower smoking rates by increasing their product portfolio. Over the years, the company's been acquiring and introducing new products in different sectors of the market. They now own various other tobacco brands and products, including vaping, oral tobacco, cigars, and they've been expanding into alcohol and weed products. It'll be a while before we know if Altria will be successful in branching out into other sectors, but for those looking for a high-yielding dividend stock with qualified distributions, this stock would be a good consideration. The next stock that just raised their dividend recently is Trinity Capital, ticker symbol TRIN. They're a venture capital firm that specializes in venture debt to growth stage companies looking for loans and/or equipment financing. They describe themselves as being at the forefront of technology and innovation, providing diversified financial solutions to the global growth economy. Trinity Capital became a BDC in 2021, although according to their website, this team's been investing in businesses since 2008. Since becoming a BDC, this company has had a really impressive amount of dividend increases. Trinity Capital's increased their dividend a total of 11 times since 2021, and they've paid a lot of special dividends as well. Their most recent dividend increase was in September when they announced that they would be increasing it by another 2.1% to now 49 cents per share. Despite all this growth, I went in depth on this stock back in March of this year, and while researching this company, I found some things that I was concerned about. I went through some of this company's largest investments, and I noticed that a lot of them weren't doing so great. Many of them were posting financial results that were steadily declining, and I was concerned about the quality of their portfolio. Trinity Capital, unlike most business development companies, are willing to invest in riskier types of companies, like those involved in cryptocurrency. Most BDCs don't like to give out money to these speculative kinds of companies, even those that focus on startups like Hercules Capital and also Triple Point Venture Growth. Overall, I was cautious about this stock when I made that video, and unlike the other two stocks that we've looked at so far, I've never been a shareholder of TRIN. Yet I have to admit that despite my pessimism surrounding Trinity Capital, there's no denying that it's been a really good performer up to this point. Not only with their history of consistent dividend increases and special dividends, but they've also seen their share price grow by more than 25% this year. TRIN is also the highest yielding company on this list with a current dividend yield of 14.12%. So if you're okay with taking on more risk, then Trinity Capital might be a good option worth considering, but I'll probably stick with other companies. Finally, one last stock that continues to not only grow in share price but in dividends as well is Arbor Realty, ticker symbol ABR. Arbor Realty Trust is a company that specializes in loan origination and loan servicing. They primarily provide floating rate bridge loans to real estate owners, developers, and investors. Although they provide bridge loans for various types of properties, Arbor's primary focus is on the multifamily sector, specifically apartment buildings. The purpose of these loans is so that property owners and developers can move ahead with the purchase of a property or the renovation of a property while they work out the terms of securing longer-term permanent financing. Issuers of bridge loans are able to charge much higher interest rates than average, and these loans are usually backed by some sort of collateral. Out of all the stocks we've looked at, ABR has had the best performance in terms of dividend growth over the last decade. A decade ago, they were paying 13 cents per share in dividends, whereas in July they announced their most recent dividend increase to now 43 cents per share. That's a 230% increase in their dividends in the last decade, which is really impressive. They almost never pay special dividends, but it's still an outstanding track record. Arbor Realty is a mortgage REIT, but they're a different kind of MREIT compared to some of the much larger companies in this sector like Annaly Capital Management. Their business performs two different functions. They originate different types of loans, mostly bridge loans, but they also issue preferred equity and mezzanine loans. As previously mentioned, the majority of their loans are for multifamily properties at 91%, but they also have 7% for single-family rentals, 1% for land, and 1% for office properties. The other function Arbor Realty performs is originating, servicing, and selling mortgage loans through government-sponsored enterprises like Fannie Mae and Freddie Mac. These types of loans have low default rates, and according to Arbor Realty, there's a high barrier to entry for companies who want to do the exact same thing that they're doing. As of their most recent quarter, they had a dividend payout ratio of just 68%, and they recently repurchased $37 million worth of their own stock. I also like that they're internally managed, which does reduce costs and allows for more income to be passed on to shareholders. Overall, Arbor Realty is a very rare breed in that they've been able to keep growing in share price and offer an exceptionally high dividend yield. They're my largest MREIT holding, and I've been really happy with the success of this company up to this point. I also want to give a brief shout out to Capital Southwest, ticker symbol CSWC. They're another high-yielding stock that's also been able to grow their dividends a lot, but since I just covered them about a month ago, I didn't want to repeat myself by going in-depth on this company again. Feel free to check out that video below if you're interested. And with that being said, that's going to conclude our look at 4 high-yielding stocks that have kept increasing their dividends. Thank you all so much for watching today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher-yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.